This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're gonna have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Well, hello, good morning, and welcome, everyone. It is Wednesday, August 20th, and you're watching the AgYield War Room. I am, of course, AgYield's marketing manager, everyone's favorite backup host, and Jonah Hill stunt double, Jack Coakley. Now, if you have any questions or comments today, we'd love for you to join the discussion. You can post a comment below anywhere you see fit, and we're always answering your questions and comments at info@agyield.com. Let's see here. We got some export sales, which I will try to rattle off, which I was just told is not popcorn we're sending to Colombia and Mexico. Anyway, so it's looks like we got 100,000 metric tons of corn to Colombia for the 25-26 marketing year. Again, not Chicago mix, caramel and cheddar, which I thought it was. And then 125,741 metric tons of corn to Mexico for the 25-26 marketing year. With all that rambling from me, let's go to someone who really knows what they're talking about. Let's go to Brian with some overnight numbers.
Thanks, Jack. A little mix overnight. Sept corn just up a quarter at 379 3/4. Sept beans opened unchanged, went a little higher, and ended up down 1.5 at 10.11 and Sept Chicago wheat up 3.5 at 502. We'll see what numbers continue to come in on the ProFarmer tour and see what the day brings.
Thanks, Brian. Well, let's open this up for discussion here. Dustin, we'll start with you. Just let us know where your head's at as we start the day.
Yeah, Jack. Not a lot of news. I think the important thing to remember is we have September CBOT option expiration on Friday. So where are the open strikes? I imagine that there are quite a bit of open puts right now that we have to consider. Once we get past that time frame, though, the next 4 days going into next week leading into first notice day, traditionally it's been, especially in recent times, last 10 years, it's been kind of a poor week. It's the end of the line for a lot of bushels that have been left on DP or rolling on basis only contracts. So again, when you force all these market participants to make that same sell or not sell decision, but kind of jam that all into the last week, it can be kind of an albatross on the market. I'm not saying that's what's going to happen, but that's just a little bit of my fear of what we could see over that next 10 days. So now could be very wrong on this. We'll see what kind of setup this is. It's kind of like the new golden roll. Like a lot of market participants are planning on it. We've been talking about it a lot, right? It's not like we're the only ones that have noticed this. So it's how much is this subscribed to too? If there are a lot of people that have sold with the intention of buying against these contracts in the end, then we could say it's oversubscribed and it goes the other way. So no promises either way, but just reminding everyone what we've experienced the last couple of years. Last year happened to be that low was August 26th. So
yeah. Great stuff there. Justin, anything to add on top of that?
Let's see. Well, obviously we're getting the ProFarmer numbers. So, it's tough. You look at X or you look at individual people going out there posting pictures, it looks like, things are super disappointing. And then the average comes out higher than last year for most of these states so far. So, try to look back at like what raw data they get on the state level and then what they actually come out with their estimate. They have some formulas, and you can argue if they just try to get close to USDA number or, to some degree they try to do some kind of percent deviation based on past performance of how they come out versus the USDA. For instance, like South Dakota, they typically, come up with a higher number than the USDA, so they adjust down from their actual raw data. The other states, they come in lower than what the USDA comes out with. And I'm sure there's some factor in there for what stage it's in, what they think the potential is for kernel fill, all those kinds of things. So obviously, I think the big ones are going to be So far South Dakota was extremely large compared to the last several years. Nebraska had really high pod counts. Corn was a little bit better. So far they've all been a little bit better than last year. Illinois, Iowa are going to be obviously super important. I think a lot of people are skeptical, myself included, on the Illinois number, the latest USDA from what we're seeing from clients in our own farm. So that'll be a big one. Then Iowa's obviously a record written down by quite a large margin. So to see if what they're finding, jives with what the government's saying. My guess is they don't come in too far from the government, just historically within a couple bushels. So see if there's if they feel there's enough evidence to, go outside of that range. Other than that, I agree with Dustin's point, see where we are first notice day. I have noticed that last several mornings, we kind of break right on the open, and then there's someone steps in and buys it, for the first hour of the day in corn, I'm saying. So we'll see. The other thing, notice University of Illinois Farm Doc came out with their new crop budgets, forecasting the fourth year in a row of being below break even, with corn being basically a negative $100 an acre return, with new crop prices and assumptions that they have means about break even. So interesting to see. It's something we've talked about. Costs are just super sticky. We'll see how this plays out. That's with this, some decent assumptions on, farm bill payments. I think Dustin, $45 an acre, right around that.
Yeah, they
having $100 an acre loss in corn.
That's built right into their balance sheets. So it's obviously needed just to keep people afloat. All these things, Farm Act last year, increased PLC, ARC County coverage this year, same for next year. Unintended consequences. I don't know if that helps or hurts things from a pricing standpoint, just because it gives a little bit more leeway in the balance sheet, like what they're already accounting for.
Yeah, I do think that it could go to what you've been talking about, but we could see some, if big yields, whether it's, in my opinion, 183 or bigger, are verified with these new acres numbers in corn, you're going to have plenty of supply. You're going to have a long time, even if you get to the government demand numbers, which are suspect, or to get to those numbers, you probably have to get pretty cheap and stay pretty cheap to see those kind of yield or those kind of demand numbers. So as long as we're, 183 or above, I would expect the new crop contracts to catch a bid at some point here after whatever kind of harvest low we make. So you could just continue to see wide spreads and maybe a stubborn back end of the market, at least till spring.
Yeah. No, it could be the poison pill for sure if we carry too much in. I think one of the best things that the market could have happen is, while some of these things are, especially insurance, if insurance is protecting you as a grower and you've got something marketed and you have these bigger farm bill coverages, a drop before these things expire would be probably a blessing, just because it's going to encourage more demand. It's going to be less likely we're going to carry 2.5 into the next year. We can burn through it a little faster. So people hear like, oh, you want corn to drop? I'm like, I don't want corn to drop. I'm just saying, from a risk standpoint, it probably is the best thing to happen if you have strong policies and you have strong farm bill coverage this year.
It depends on when it drops, right? The worst would be if you went sideways until mid-October and then broke into March.
Right.
Would be probably the worst case scenario.
Like while these are active. Exactly. Like
Right.
that's the key there. And it's not going to be the case that everyone has those insurance policies out there. I'm sure if someone is holding a 75% policy, that's not what they want to hear either. But the other thing I wanted to talk about too was the just the corn bean ratio is strong, so that is giving some opportunities for maybe going over the other side where we don't have as much coverage. We talked about this a lot. We had a recommendation out yesterday. Beans are something to focus on again, because they're actually at a relatively good value to corn.
Yeah, great stuff there, guys. Ben, unlike Dan, I have admin access to our streaming portal, so I'm just going to. Oh, he did. You beat me to it. I want everyone to know that Ben unmuted himself before I could get to it. So Ben, what do you got?
I feel like there's starting to be a more vocal people that are really frustrated with the government not getting things done as quickly as they would like when it comes to agriculture. Feels like we're getting kind of trinkets and tokens. I think that when you look back at this last year with a 1.3 billion bushel carryout, and the best we could do in July was 520-ish. Granted, we planted a ton of corn and we have a monster crop, so I think you have to weigh that in as well. We've made progress in soybeans with domestic demand. I think we need to be doing more in corn for domestic demand. The growth that we've seen in production since the ethanol boom is staggering. And, relying on other people to save your industry, it has its pitfalls. And I feel like we're in that pitfall right now. So I feel like people that have been very patient with the new administration are getting impatient and getting a little louder. I don't know if that speeds things along or not, but there are levers to pull that could increase domestic corn demand. And, when you look at, Dustin brought up the new Illinois farm dock stuff, like there's an equation that is not sustainable over the long haul, in my opinion. Even with, with crop insurance and payments and things like that, it's kind of the never-ending circle of overproducing for what we have for use right now. So we'll see how it works out. Hopefully people are listening and they're able to get some things done here and get them done sooner rather than later.
Hey, there's one thing I want to add, not to be off subject a little bit, but to Dustin's point on beans versus corn, another thing, there's been a lot of chatter about potentially some of these SREs, these small refinery exemptions. It's been passed around courts. It's been consolidated in DC now. There's talk that could be some decisions as soon as this week. I'm guessing it's in the next couple weeks you might get some. So the fear is that there are some exemptions that are granted. I think that's why you've seen soybean oil kind of been selling off. It seems like soybean oil might be the most affected, even versus corn in the short run. So maybe that's another reason that you should just maybe look at some bean protection if you have nothing sold or want something just for some downside. So I think the market's gonna be watching that a lot.
Yeah, and I think that's great. The other thing that I think is also, because right now beans are value. Beans can go to any value they want to versus corn at this time of year. Of course, it's not there's nothing really holding it back fundamentally. But just talking about that first notice day on corn, funds did use last year's first notice day timeframe to actually buy back in their huge short position, and they're very short again corn this year. So when one of the things when you mentioned earlier, you notice this buying in the first hour, it could start to show up that they're liquidating a position and they're using, the unfortunate time frame for the grower that's holding all these positions. They're literally trading positions with them to buy back the market. So just something to kind of keep an eye on Friday's COT reports. They continued that buying program all the way through Feb of last year. That's why March corn had a $1 rally from August 26th until middle of Feb. Not from the funds specifically, but they were certainly a part of that. They flipped a big position during that time frame.
Well, and we ran into buying, right? So we had massive Mexican buying that entire time frame. And actually, we have a bigger book of business on this year than we did last year at this time for new crop sales. So, it'd be smart, right? That's a seasonal, they figured out when you typically make lows and you have to have a big seller to offset your buying when you're already a big short. So if you want liquidity, it makes sense on the timing. Doesn't mean it has to go up either. If there is enough supply that's coming to market at harvest, we've obviously started harvest. We'll be starting the southern half of Illinois. We'll be starting, end of this week and on the bigger growers. So see how that plays out.
Yeah, great discussion, guys. Ryland, let's shoot it over to you. What's going on with livestock?
Yeah, well, it was a little bit of a firmer close yesterday. Obviously, another round of decent support in the back end of the market. So the 26 contracts really kind of starting to lead the charge. And really, I think it's been more apparent ever since the last um, press conference with the USDA secretary, just kind of reaffirming that the border is going to stay closed until they're ready to open it. But otherwise, pretty quiet day. I mean, we're still just chopping around contract highs. Feeders made new highs for the move, new record all-time highs. So everything's still kind of maintaining that same trajectory in the feeders, but we are seeing the momentum kind of slow down in the live side of things. So it seems like there's a little bit of caution here before the cattle on feed report on Friday here. I think the placement number is really going to be a big question mark for right now, and potentially down 10% from last year. But even the near term kind of fundamentals here right now, box beef just exploding, is really kind of helping add support to the market, and just the idea that packers are going to be forced again to kind of pay up and expel some of the margin that they've been saving on this beef rally. So those are things I think to look at, see if there's any kind of cash indications. But right now, there just hasn't really been any bad news. It just feels like the length in this market's probably starting to get more comfortable with, trying to pick up some discounts in the back end. So we'll see if that trend continues today. The hog side of things, just kind of an uninspired mixed choppy trade, just kind of feels a little bit on the weaker side, just especially you had a $3, almost $4 break in carcass yesterday, with bellies down about $7. So it looks like we're starting to see some of that seasonal pressure really kind of impact the carcass here. So I think that's really going to be kind of the focus for right now, and how big the discount needs to be in the back end of the market. So otherwise, cash was up. So I mean, you're getting kind of good, two sides on the data here, but it seems like carcass is probably what leads us to start here this morning.
Thanks for that, Ryland. Looks like we just came into the open here. Let's shoot it back to Brian with some opening numbers.
All right, thanks, Jack. Sept corn up a quarter, 379 3/4. Sept beans down 3/4 at 10.12 1/4, and Sept Chicago wheat up 4 at 502 1/2.
Thanks for that, Brian. And thanks to you for tuning in. Do us a favor. Go ahead and like and subscribe to the AgYield YouTube channel. It'll keep you up to speed on everything we're doing, any content we're putting out, when the shows are coming out, and it helps us get our show to a larger audience. So thanks to everyone who tunes in every day and supports the show, any way they can. Of course, we're doing this every day that the markets are open, streaming live on X, Facebook Live, YouTube Live at 8:15 Central Time. Appreciate everyone's thoughts and comments today, and let's have a great day, and we'll talk to you guys tomorrow. Dan will be back, and but I'll be back next week, so look forward to that. So thanks again for everyone for being here. See you later.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.